Hello everybody, welcome to our half-year results 2025, Pierre, Vacances and Center Park, with three of us here, Georges Samper, who is the chair of the board, and Philippe Lederman, who is the CFO of the group. So let's have a look at the half-year results. We're here to talk about the first half of the year. We announced the revenue. The key word is really to take into account the fact that our business is a seasonal business and that you have to look beyond the 31st of March and also take into account calendar effects, because if you just look at H1 alone, you get a biased view. So we'll be talking you through this because obviously the revenue and the results for H1 are affected by calendar effects. So looking ahead a little bit further, 2 points. First of all, the in-depth work that has been done to enhance customer satisfaction across all brands for the first half of the year. And secondly, renovation and promoting the growth of our inventory for each of the brands. And that's true for the coming half year and the coming years. And then looking forward a little bit, because you can't just focus on the first half of the year. If we look at full year trajectory for 2025, in the light of the momentum of reservations, our reservation portfolio is very full, and also our continued cost control at group level, we can announce EBITDA guidance of above 180 million euros for the full financial year 2025. Let's take a look at the results of the first half of the year. Philippe. Thank you, Franck. Hello, everybody. Let's take a look at deeper dive and look at revenue. You can see here that revenue has down slightly, minus 0.9% for the first half of this financial year because of anticipated calendar effects, which means that some of the activity that would usually be in the first half of the year will be taking place in the second half of the year. We can subdivide this in two parts. We've got accommodation revenue and then other tourism activities. Let's look at accommodation first. It is down minus 2.3% compared to H1 2024, but up 0.5% if you exclude the calendar shift effects. And if we drill down a little bit into the brands, you can see here Center Park minus 4%, but stable if you exclude calendar effects. So I said calendar effects. What are these? Easter last year was in March, but this year it's in April. So it's in the second half of the financial year. You have the Easter weekend, but that is linked also to school holidays, which have shifted as well. Just one example, in H1 we had 16 fewer school holiday days than in Germany, 9 in Belgium, as compared to last year. So in the 4 countries where Center Park is operating, we've lost 28 school holiday days, but in the second half of the year, we'll have an extra 27. So there's a calendar shift, and this means necessarily that there will be more business generated in H2. So there's the calendar shift, but also note that there was one Center Park estate which was closed for a full 2 months in October and November because it was under renovation. And that, of course, has an impact negatively on Center Park revenue. Finally, the average sales cost has increased by 2.3%. Yet there have been fewer school holiday days. And of course, usually you can bill the highest cost during holidays, school holidays. So this shows that we are enhancing our brand image and prestige. Let's look at Pierre and Vacances, plus 2.4%. And plus 3.3% if you exclude the calendar shift. This is driven by very strong activity in Spain, plus 21.8%. We're going to continue development in Spain. We've increased the number of accommodation units by 14.3% there. Regarding the other activities, we had a drop in leasings because one of our residences, Avoriaz, was being renovated. So if you look at the activity with the same perimeter for units, you can see that we have a stable activity. Pierre, Vacances, a very good winter season in the mountains. Two figures here to note: occupancy rate of 96% and average sales cost price of also up 1.7%. And then let's look at Adagio, down 2.2%. But 1.7% if you exclude calendar shift. There's a drop in activity in France, down 3.9% in France, because we've withdrawn from 2 hotels in Lille and in Marseille. And also in H1 2024, we had a very lot of business because of the Rugby Cup. In other countries, revenue is up. So accommodation revenue is plus 0.5%, excluding the calendar shift. If you look at other tourism activities, you can see that they've grown by 3.8%, driven by Maeva, doing very well, very strong growth, plus 21%, which confirms the relevance of the business model there, which is on-site presence and web presence. Then other revenue, 41.9 million. It was 55 last year. This confirms the group is withdrawing from the real estate activities that it had. Now I suggest that we look at the operational report, 2 columns, H124 on the right and H1 2025 on the left for comparison purposes. First of all, I'd like to remind you that the group's activity is seasonal. 40% of our revenue in H1, 60% in H2. But costs are more or less evenly distributed over both halves of the year. So H1 structurally always has a negative EBITDA. Furthermore, this is my second comment, bear in mind that last year EBITDA included the German COVID subsidy, which of course was not recurring, 11 million. So if you compare the EBITDA of this year, minus 40, with that of last year, the drop in minus 19 needs to be restated, taking into account the 11 million in subsidy from Germany. So year on year, the drop is 2 million. Why is this? Because the calendar shift effects that we've described previously and that are illustrated here on this graph I'm indicating now, and particularly the Easter holidays, accounts for 15 million. And then there were site closures that account for 5 million. And the graph also shows that over this semester, this half year, we have had a reversal of depreciation of the Gascon site, which means a re-evaluation of the assets with an increase in the value because following the lower interest rates. So EBITDA is minus 40 as compared to minus 21, minus 11 because of the COVID German subsidy, and the remaining -8 can be explained because of the calendar shift effect, -15, the closure of sites and renovation, and this is offset by the Langue de Gascogne provision, so -8. If we go down to the bottom part of the P&L report, you can see that financial charges have increased, -4 to -8. But you know that last year we reimbursed the full amount of our reinstalled debt to have an RCF line that we only draw when required. So the financial charges should in principle fall, but what happened is that last year there was a non-recurring item under financial charges. If you exclude the lease loans, and that non-recurring factor goes down from -97 to -8, and that is actually a reduction. The cost of gross financial debt has fallen. The other operating expenses have fallen from 14.9 to 13.5 minus, and taxes, this it relates mainly to the Netherlands, the net loss, which is in line with the drop in EBITDA. The final factor regarding these results, debt and cash here, and I should make two comments at the outset. First of all, we said that our activity is seasonal, and this leads to negative EBITDA structurally in the first half of the year. The same is true for cash. We have a seasonal activity, and therefore we use up cash in H1 and we generate cash in H2. Also, we have set up this year, and in fact in 2024, a revolving credit facility that we can draw on when we need it, 205 million. We reimbursed the total amount of pre-installed debt resulting from restructuring, and this means that we have really closed that chapter of restructuring completely once and for all. This means that the debt as of the 31st of March 2025 is as compared to the 30th of September 2024, but comparing debt and cash situation in H1, H2 is not very reliable, but you can see here that we've drawn 80 million of RCF debt out of a total of 125. We had 50 million for property loans, 6 of other, that's 136 million, and 80 million cash. This gives you a net financial debt of 57 million. And we can confirm that in the first half of the year, the second half of the year, we'll have negative debt and we will be generating cash.
So while we can see that business is slightly down because of calendar effects, but they have been offset, or they will be offset in H2, we have EBITDA, which is in line with turnover, seasonal cash, with cash expenditure in H1 and cash generation in H2, and overall negative debt by the end of the year. That's it in a nutshell. Thank you very much for the financials. Now for the second half of our presentation, I'm going to talk about everything that we have done to enhance the customer experience and develop business. So how we can boost our brands to boost our business and create overall value for the group. So our focus, all 13,000 employees, is to really boost customer satisfaction. And that's what you have here on the screen. You have all of our brands, Center Parcs, Pierre, Vacances, Maeva, Adagio. In the first half of the year, they experienced positive customer satisfaction growth. So we can see this through the NPS, the Net Promoter Score. Center Parcs increased 4 points, hitting almost 20 NPS points, and a Google score, which is now at 4, which is absolutely key for customer satisfaction. Pierre Vacances, their customer satisfaction also increased in France and in Spain. The NPS is now at 46, which is 4.5 points above last year, and a Google rating of 4.1. For Adagio, we actually look at a rating out of 100, so it's not the same as the NPS. I mean, we do measure the NPS, but here this is a rating out of 100. It increased from 83 to 85 for the first half of the year. And Maeva, NPS, it also increased 6 points, going from 11 to 16. So these are the key items, either for first-time customers or repeat customers. What this shows is that they want to come back, generating further turnover. On the right-hand side of the page, here we're talking about what we have done to improve our customer experience. I'm sure you're familiar with our renovation program for our Center Parcs. That's continuing. We've got 2 examples here. We have the Eau de Bruyère, and Philippe told you about the 2-month impact that we had from closure. And we also have completely new Center Parcs there. 66 million in investment, co-financed by the group and the facility owners. 720 cottages completely renovated with a new customer segment that we're targeting. So there's been a shift in segment. It decreased by 13% the comfort type cottages. So they used to represent 45%, but they have dropped, and we're at 70% now for premium VIP and exclusive type cottages. Thanks to this renovation, when we look at the overall performance of that park from last year to now, we have a 32% increase in RevPAR. So it's a brand new park, figures are increasing, customer satisfaction is increasing considerably, up 12 points in satisfaction. So this is a perfect example of why we are continuing to do what we started over the past few years in the Netherlands and Belgium. On top of that, we're also continuing renovation work. We have a fine example here of our residency in Vacances. It is the renovation work of one of the emblematic buildings there. It's internal insulation that we're adding onto this building. So it's for heat insulation. We have cut our energy consumption by 2, so cut it in half. And we now have the best environmental performance with BBCA certification. And for a 4-star residency, we have completely overhauled the interior of the apartments. They are now redesigned. Half of the residency is being completed this year. The second half will be completed next year. So this is a fine example of what we are doing for Pierre and Vacances in the mountains. In addition to customer satisfaction and facility improvements, we also want to continue developing our network of facilities, because we know that we have a lot of fixed costs, so therefore we need to continue developing. On that front, there are a lot of positive items I can share with you. We've just opened a new domain in Nordborg. It's the Nordborg Resort in Denmark. So this is the 5th country now in which Center Parcs operates. We are operating for a third-party investor, which is, again, perfectly in line with the fact that we are going asset light. We are reducing our real estate risk. So we've got 200 million invested in this park, 200 hectares big. It is our first Center Parcs facility in Scandinavia, located in Denmark. And this is going to be a management contract type deal. So this is the first place where we are going to be running it as a contract, no longer owning but leasing. So it's a very different way of managing our risk and reducing our risk. And we operate this in Danish kroner. On the left, you see the jetty going out to the dock. And then you also have the facilities on the right. Now, this is actually a place doing very well with good sales. I think we already have 70% occupancy booked for August, and a lot of local Scandinavians, and 20% of the future customers are Danish, and the first customers will be entering its doors on the 20th of June upon opening. And we're looking at about 30 million in turnover for the year. I think this is a fine example of this type of facility. So with 440 cottages, 25% of them are comfort-type cottages, but the rest of them are premium, 20% VIP. So this is a perfect example of what we want to do with our brand. On the right-hand side, this is a facility extension for Village Nature Paris. We have 193 cottages, and between now and June, we'll be adding in roughly 85 cottages, premium, 108 VIP cottages. So 108 of the VIP cottages, they were opened up to the public just recently, and the premium cottages will be opened up by the end of June. Overall, that means 193 new cottages for Village Nature Paris, taking the overall number of cottages to 1,061. 34% of them are VIP, and this bolsters our brand's position as being a premium brand. Now, what we do know is that the visitors out there are half of our visitors are going to attend Euro Disney, the Disneyland park just nearby. And we can fit roughly 6 people in each cottage, whereas in the past we used to only be able to fit 4 people per cottage. So in doing this renovation, adding in these new cottages, we're actually increasing the average number of people that can fit in our cottages. And I think these 2 places are fine examples of what Center Parcs has been doing. Pierre Vacances, a lot has been happening in terms of going more asset light. On the left-hand side, you can see our work in Spain and France. We have 27 residencies under asset light type management. So it's either as a franchise or a contract management type base. 4 additional sites in 2025 with some fantastic destinations in Portugal, Italy, the Alps, not just the French Alps, but we'll talk about that in just a moment, and also in Spain, with a huge boost in business development with 6 new destinations, 16 hotels in Spain that we're currently operating. And with the 6 new destinations as hotels that we're opening this year, again, you can see the list there with some fantastic locations with the Canary Islands, Ibiza, Alicante. And in terms of our Beyond Reinvention, we're talking about 3,600 new accommodation units between now and 2028 for Pierre et Vacances. So that's roughly 800 to 900 each year. And this year in 2025, we're actually going to be opening 1,000. So 1,000 units opened, which are going to add into the overall number of Pierre et Vacances units. But Pierre et Vacances are continually increasing the number of new units. And what we can see is that our business development and our park development is actually outpacing the rate at which we're closing other facilities. So we are seeing a net increase. Now, in terms of apart hotel, we have 2 new facilities. London, which opened just last week, and Stuttgart is set to open on the 1st of July. So here we see our international expansion to some of Europe's leading capital cities. This is part of Adagio's growth plan, where we are going to have 180 apart hotels by 2030, increasing our geographical spread. Talking about Maeva now, they have both online and physical presence. It's an online booking platform, but there are also physical spaces, either in campgrounds under the Maeva brand or in private rental situations. So we have 5 new seasonal rental agencies opened in the first half of 2025 and new campgrounds 17 new campgrounds affiliated with the Maeva brand in 2025. So that's over 100 physical facilities around France for our customers. So we just spoke about customer satisfaction and park renovation. The final point I want to talk about, and it's a fundamental topic for all, even us in tourism, and that's generative AI. We've been tackling this topic from a number of points of view. So we are doing it with a very clear mind, but also being very realistic. On the left-hand side, what we're talking about here is how we want Gen AI to be driven by a strong hub of experts. We have 130 experts across all of our various functions, so IT, but also revenue management, e-commerce, sales, marketing. Experts who can work together across functions and ask some fundamental questions. How can we use Gen AI in coding, in the way we promote and market our product? How can we use Gen AI? And this is very much top-down, coming from experts. That's one way of doing the work, but from a bottom-up approach, we want Gen AI to be used by all. And we want it to be a secure solution for all employees. So any employee with access to a computer, here we're talking about 3,500 employees who have access to full Gen AI. Now, we're not using licenses, because licenses can cost a lot to run. We have our own in-house AI solution, which is called Alfred, and it is a system where all of our employees can ask any sort of question in any language to help them. So you see both top-down and bottom-up. Gen AI Pioneer Club and Gen AI for all. So this is a way of helping us boost productivity and reduce costs. With all of that in mind, this is going to help generate use cases for customers. And you've got 6 perfect examples down the bottom of what we're currently working on. We've been working on it since March, to be specific. And the 2 key points I wanted to say here is on the top right. It's the WhatsApp conversational reservation tool. So there are 2 brands. Maeva is actually creating its own tool, which is going to go live in just the next few days. And Center Parcs is also going to incorporate its own reservation tool on its website, so we'll be able to compare the 2. And then we also have the WhatsApp conversational during stay support. So this is for customers or people in our facilities. If they need assistance, if they need maintenance, for example, they can use the WhatsApp conversational bot. So Center Parcs has already gone live with it, and it's a WhatsApp line which is up and ready to go for 3 of the parks. And Pierre and Vacances, by July, will have its own tool. So we'll be able to compare and contrast the 2 tools to use the best of both worlds.
That's what I had to share with you regarding H1, regarding our approach, our various activities, enhancing client satisfaction, continuing renovating our portfolio, and we're continuing to developing our approach to Gen AI as well. Now, finally, before we wrap up, which I will leave to George, Philippe told you that the first half of the year was rather specific. If you look at calendar in March, as compared to March 2024, there was a drop of earnings of 15 million because of the Easter holidays and the school holidays. But if you look at April, we have 1 VAC in April 2025 compared to the previous year, 35 million in revenue. So that's plus 30% compared to last year. So we need to have a broader overview to look at the year as a whole, which will end on the 30th of September. If you consider that the second half of the year accounts for 60% of annual revenue, and you look at achievement rates of May, you can see that we're over 70% of the objective for our H2 for the financial year. So the third quarter has already reached more than 75% of our objective, and for the fourth quarter, more than 50% of the objective set. So all of this is actually very reassuring regarding H2. we're predicting strong growth in H2, more than 5% as compared to the second half of 2024. We can say this given the achievement rates. In parallel to that, the group is continuing to monitor very closely its costs and to bring costs down and continue implementing its savings plan as presented to you. So with all of that, by the end of May, we feel very comfortable saying that EBITDA will be more than 180 million for the whole of the financial year. And that was the message we wanted to get across to you in presenting these H1 results. And now George will be winding up. Thank you very much indeed, Franck. Thank you, Philippe. I would like to say that a huge amount of work has been done over the last 3 years by the teams. We have given more autonomy to the various brands in the group so that they can develop fully in their sector. We can see this with Pierre and Vacances after the mopping up of activities that were generating losses and launching new activities. We're on a sounder basis. We've got good client satisfaction with a mix of cottages that help to enhance performances. The same is true for Adagio. So we are meeting our targets and have been over the last 3 years. And this is very reassuring for investors, undoubtedly. If I have to make a comment regarding our business line, it's very resilient. This sector is very resilient. If you read in the press, households are having to cut back on spending, but nonetheless, if you look at their holiday plans, you can see it's like an advertisement for our residences. We provide an excellent leisure and stay experience. It's high quality, it's fun, and this is something that households choose to continue spending money on. So this is encouraging for us in hoping to meet our objectives, which we will. Thank you very much. Thank you, George. We'll now be taking any questions online, and we have a question from Emmanuel. Paro, hi. Thank you for the presentation. I have a number of questions. What is the potential for full-year revenue for the management contract as opposed to the leasing system for the cottages, the 440 units? Question about Land de Gascogne. Why do you still have assets when the business model is to be asset light? And then what about the landing of financial net debt 2024-2025? I don't quite understand the minus 33 million. And then EBITDA guidance. Let me take the first question, contract management for Center Parc. It's a very good approach. It's de-risked. We want to keep our leasing costs down as much as possible. In a country like Denmark, it's a good idea to de-risk and not have those costs when you're moving out into a new country. The figures are very good there in terms of reservations, but it's a choice that we've made, management contract. How does that compare to leasing? Well, the revenue is about 10%. The fees, that's 10%. That's about 3 million for Center Parc there. And if you convert that into EBITDA, you get a very good conversion rate because the revenue is almost all converted into EBITDA as compared to a leasing type model. So the fees account for about 10% of revenue. That's very good compared to leasing. Land de Gascogne, why do we still own this, given that we have an asset-light model? It's temporary. We're not intending to keep ownership of the asset, but we're not in a rush. We're waiting to get a satisfactory price before selling. and drop in interest rates are favourable. We're not in a rush to sell in 2025. Probably won't happen in 2025, probably more in 2026 or 2027. We're waiting to get the right price. The third question, if we could go back to this, about forecasts of net financial debt, it will be negative. We're not committing to a particular figure, but it will be negative. And by the end of the year, we will not need to be drawing on the RCF. What about Center Park? The EBITDA margin. It's a very dynamic brand. In the second half of the year, we've got revenue forecasts of between 8 and 9% of growth for accommodation. All the non-accommodation part, well, 60% in a Center Park is usually for accommodation and 40% for food and retail and other activities. And we see growth there is systematically higher than for accommodation year on year. So there we're expecting very strong growth. We're not going to give a figure for the EBITDA margin, but we expect it to be in double digits, EBITDA over revenue. Top line growth hypothesis we've answered. Miriam Marriott, M&A, is this part of your growth strategy? The last transaction goes back to 2023 with Vacances Soleil. Vacances Soleil was a very good transaction in terms of earnings growth for Maeva and H2. 3/4 of that is due to Vacances Soleil. And Vacances Soleil has very good sales performance at the moment, whether it be the conversion rate or costs. It's very much in line with maeva.com, the site. And campsites also very good in H2 in terms of afford reservations. There are others underway. We've acquired 5 agencies for Maeva, and the debt level of the group, we will be negative net debt in 2025, means that we can take out more debt and to consider M&A transactions now, which we couldn't 3 years ago. So we are on the lookout for good opportunities in terms of M&A. Have you got an internal AI charter for responsible deployment? Yes, absolutely. This is essential. We do have a charter, and it's been rolled out with all of the workforce, the whole team. We want to generalize the use of AI. We don't want people to be going straight to ChatGPT. And then everything will be in the public domain, which is not appropriate. So we have a charter which sets out the rights and the responsibilities of everybody in the company. We've got our internal tool, Alfred. So we have this tool, which is an interface between us and OpenAI, so that not everything goes straight out into the public domain. We have the charter and we have the internal tool. Ella Zaruq has 2 questions. Could we have more details about the worsening of EBITDA in Center Parks, minus 47 million, minus 5 million are linked to the calendar shift, minus 5 million to the temporary closure of Eau de Brière over 2 months, and plus 12 million because of inventory impairment. Well, yes, that's where the situation is worse, because Center Park has very high operating costs over the year. So Center Park takes the brunt of the calendar shift effect. I gave you the figures regarding fewer school holidays in Germany, in Belgium, and this hits Center Park hardest. because of their overheads. Then also, there's been a lot of renovation. The 5 million figure we gave you, 4 of that is the Eau de Brière domain, and then we have Avoriaz as well for Pierre and Vacances. 12 million regarding the reserve. That's not Center Park. That comes under our real estate business line. And I think that what we need to add in the bridge is that the German COVID subsidy of 11 million had been accounted for under Center Parcs. It was registered in Germany because it's a German subsidy. So you've got, those are the main components of the EBITDA bridge. And also, Center Parcs is the brand that bears the full brunt of any drop in revenue because of its high overheads. And then there's another point we didn't zoom in on, but we should, the cost-saving program. What are the cost savings planned for in the financial year, and what has been achieved in H1? I don't know if we can give a detailed breakdown. Our figure for the end of 26 was made available. That was an objective. We're in line with the figure that we gave for the end of 2026 objective, and the plan is being rolled out in keeping with that objective. 55 million savings last year. I think we said more than 60 in 2026, but we will be there. In fact, we're likely to do much better. We're on track, and in fact, we're ahead of what was planned.
Toujours sur la question.
So a follow-up question from Miriam on M&A. What are going to be likely targets for Pierre et Vacances in terms of sector and geography? Well, there are 2 ways we can tackle this, and both of them are going to be profitable for Pierre and Vacances. So we have a well-positioned stock. We've been growing business. We've been looking at operations as well, and we're developing in 2 key geographies. First, the mountains, European Alps, not just the French Alps, so all across the Alps. And Pierre et Vacances is doing very well, especially over the last winter. It's outstripping performance in terms of occupancy rates, especially when we compare similar residencies to our own. In France, we do want to expand a bit further, but it's really across the Mediterranean region. We're doing very well in Spain. We have businesses in Italy, so we want to increase that there. We want to also increase business in Portugal. So for us, it's the Mediterranean region and the Alps. For non-recurrent items, I've got a question there. So instead of giving you guidance on full year, we could give you detail on what we've already booked. So we have 13 million in non-recurring fees, and that can be broken down into 6 million for restructuring costs. So that's a cash effect, quite simple. 3.5 million in non-recurring provisions. So we had to depreciate debt from a Chinese business that we're pulling out of. So that's 3.5 million for non-recurring provisions, no effect, cash effect. And then 2.6 million in costs tied to our free share program. Again, a non-cash effect. So we have a few more questions here. So in talking about China, there's no longer any risk there. We're no longer part of JVs, especially for 2 key locations there. So China, there is no risk for us there. So we have pulled out of all of our risk positions. It was an essential step for us. So we've answered the question about non-recurrent items, exceptional costs as well. We've answered that question. Well, I think that brings us to the end of our questions. I'll just wait a few seconds in case there are any more coming in. But certainly for the questions we have up on the screen here, we've answered all of them. Brilliant. Thank you very much. Well, I wish you all the very best for the long weekend.